Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Friday evening, and this is going to be your weekly charts that we look at on this July 2nd, 2021. I want to wish you all a really nice Memorial Day. Remember that I won't be doing these videos until Tuesday next time for you. The markets are open Sunday night in some of the financial markets. They trade until approximately noon on Monday, and that's Central Time. Then they'll reopen at 5 o'clock in most of the financial markets. You won't get markets that, like in the grains, they probably won't open until Tuesday. You might want to check with your broker, but it's very typical. In the action today, we added 5 more rigs to the total U.S. rig count, 4 in oil, 1 in natural gas, unchanged offshore. There has been no OPEC deal to report at this point in time, with the UAE the holdout, and we'll see what happens with that. They want to produce, obviously, more oil, and the market wants the more oil. When you take a look at the market, we had a good market today in the stock market. You had a sweetheart number in the jobs data. As it turns out, we added 800 and some odd thousand jobs, but you didn't get a big participation rate. 61.1%. Employment number, the hourlies did go up slightly, and you made about a dime more an hour. So you don't have wage inflation choking this market off. I have said that I don't expect to see real number growth. This is steady growth. I like this, but not really big numbers until more states go off the COVID relief program, the government extra $300 a week, which 25 of them have. So that's the roll-off right now in July. You had a bunch roll off in June, and you get the rest rolling off in September. So it's going to be a mixed bag. Where's the big hiring? Probably the leisure areas, the hotel industry, restaurants, all that. Big paying jobs? Not really. And one of the things that you have to be concerned, people look at this, how bad employers want, and they start putting values on themselves that aren't realistic. $15 an hour is very realistic as a minimum pay, in my opinion. And you're getting that sweep across the United States. You see that. But people that are making 15 saying, I want 25 to go back to work, probably not going to happen. Remember, and right behind them, there's a group of people wanting these jobs. So I think people will get an increase, but I don't think it's necessarily a big increase in pay. And I think a lot of this is, again, transitory. So looking at the markets, let's take a look. The first chart we start with here is going to be a monthly chart. And it just gives you the bigger picture. And the bigger picture is first, this market hasn't gotten back under the 18-month moving average of closes since early 2020. Therefore, when a market's over the 18-month, the 18-day, the 18-week moving average, the bias is up. Under it, the bias is down. That's how I teach charting. It's a filter. The next chart we're going to look at is a weekly area chart of closes, not monthly, but weekly. You haven't been back here under this until October of last year. So again, one of the rules of thumb that some traders should use is if you're over that number, be it on a daily chart or a weekly, if you're getting sell signals on a weekly and you have the bias still up, they negate each other. Same thing on the daily. In this case, any sell signals on the weekly side of it would have been negated, in my opinion, because the market has been up. That's if you're using weekly charts. The other thing I'll do is I'll look at this market, and I created an indicator called a swing line. Now it looks at 5 things. Is the market making a higher high than yesterday, a lower low than yesterday, an inside day where you don't take out the high or low, or an outside day up or down. And then I created the rules to plot this line. What am I looking for? You'll hear so often people say an uptrend is made of higher lows, higher highs, a downtrend, lower highs, lower lows, and no trend has in some sequence a higher high and a lower low. Well, in this case, you've got a bull trend. You have higher lows, higher highs, bullish. The market is over the 18-week average of closes, bullish. Now, I use 2 areas of factors for profit objectives. One of the areas is a Bollinger Band, the other is a window envelope. In these videos, which are not my paid subscriber videos, I only show the Bollinger Band. And the Bollinger Band is up here. Why do I show it? Well, 95% of the time, the market will trade within this algorithm. It is made so you can hit it and step out of it, but you won't stay out of it long. You can see that. So when you first hit it, think of this. Hey, if I'm not staying out of it long, maybe that's an area to take some money off the table. Then I look at momentum. This is called a slow stochastic. Here's what I love about this market. A slow stochastic can get overbought, oversold, or what I call embedded, which is locked in. Locked in occurs when the two numbers that make it up, the red line's called a K, the D is the blue, when they're going sideways over 80 for more than several days in a row. When that happens, it tells me that on each one of the breaks, the market should be bought. And you're out when this takes place, not on the chart action, but off of this. If you get a close under 90 like you did here, the odds favor you're going to pull back as a minimum towards that 18-week moving average of closes. In the NASDAQ, you're up to the upper Bollinger Band, not trending. I have a course called the Enhanced Bollinger Band course on our website. You want to look at this really hard. But in any case, I think the pros are taking some money off the table when you get to that upper Bollinger Band the first time. It is embedded. They won't take it all. They'll probably take a portion and look to be buying on the breaks again. In the industrials, all you did is you had a downtrend, and I'll show this to you right here. And the first spot markets often try to retreat to is that line in the sand, that 18-week moving average. You can see what it's done here and other areas, and this is what it did. Now, I was warning on the daily charts, there's a pattern where the market, in a bull market, can get under it, but it doesn't stay there very long. It gets right back over it. You're pretty well doing that still in the Dow. So yes, you've had a correction down to that 18-week. It is not in a trend since you got lower highs, lower lows, nor is it embedded. Not one of the prettier charts. In the Russell, I have something called the psychiatry trade. And it's when you narrow in Bollinger Bands like this. What typically happens is you hit the upper band, you fall back, you hit it, you're going crazy, you want to call your doctor because why isn't it going through one way or the other? It's called the psychiatry trade. There's a way we measure breakouts. If it occurs, you're not there. You're in what I'll call an uptrend with upside bias that's overbought into serious resistance of the upper Bollinger Band. In the 30-year bonds, what do you do when you're coming up in a market? Now, I just explained this to you, and you get to a Bollinger Band. The odds are the pros are going to take money off the table there. I'm not the only one that understands the Bollinger Band theory. So as it gets there, I'm looking for corrections. You got it. Now what's the market want to do? Well, momentum is flat. The trend is up, but that's still going to be serious resistance. Big time. Do I think traders buy into a Bollinger Band? I want to use this word very carefully. Never. 10-year note. Getting into that psychiatry trade again. Now, this is different parts of the curve yield. You got a higher high and a lower low. There is no trend. You're going sideways here. And what are you trading against for almost 5 weeks? That 18-week average, that line in the sand, is the market's trying to figure out what to do next. In the dollar index, uptrend. Higher lows. Once it got over the 18-week average on a close, it's just kept itself going. Where do I think that the resistance will show up? Right through here. Is the market a buy on breaks? Well, if you get under 91.50 and a half, no. And it's 93.32 and a half is where I think the serious resistance will show up. Eurocurrency, momentum down, bias down, trend down until you take out 119.94 and a half. I think the pros will be trying to break the market further. Canadian dollar, 3 weeks in a row of fighting at the 18-week average. Again, I'm going to repeat. Those first breaks when you've been in an uptrend don't last very long under it typically. If they do, you've probably broken the back of the market. Haven't done that yet. Japanese yen, totally out of favor. Lower highs, lower lows, finally down to the Bollinger Band. Now, it can ride the Bollinger Band. That's one way of looking at it. And that can happen often when you embed a slow stochastic. You haven't done that yet. You're just in an oversold condition. I wouldn't be surprised if the pros are lightening up on short positions. Bitcoin, an oversold market, higher high, lower low, bias down. WTI versus the Brent. Well, look at the difference. We've come into $1. We were 4.25 recently. The spread difference between the two is narrowed. Why? The U.S. just isn't producing a lot of oil. While the rig count went up to the 400 and something today, we used to be 1,000, 800. So we're just adding pieces here and there, but not really increasing our production very much, which means the differential going to stay strong. And here's the Brent. Market's up. Why is it up right now? Well, they haven't decided if they're going to produce any more oil yet. So that makes all the sense in the world. But again, you don't stay over that Bollinger Band more than 5% of the time. Riding it is not the same as being over it. WTI crude, this is an embedded reading, which means on the breaks in the market, I think the pros will buy until the red line on a settlement basis on the end of on a Friday is under a 79 level. Rebob gasoline in an uptrend with an embedded reading, first challenge of the upper Bollinger Band. I think the pros take some money off, but I don't think they give their core position up. Why? Until you lose that embedded reading and the market's giving you the breaks to get in on the weekly chart, it still looks very, very good. I teach all this and explain more Monday through Friday mornings. Let me explain that. At 5:40 in the morning, I record a futures market video. It's ready after 6 o'clock, that's Central Time. I wait until 10 minutes after the stock market's open, 8:30 Chicago time, that's 9:30 Eastern, and I start recording the Spider ETF. I cover in each over 40 charts, each one, they're separate videos. So I'm giving traders ideas as to what's going on. I start off every single morning with the news of the day. What's going on in Asia, Europe, back to America. What are the reports at 5:40 in the morning that are coming out for the day? Because it's rare that any of them are out in the U.S. But if there's something out of Europe or Asia that's come out, I will be talking about that. By 8:40 in the morning, I already have the reports. And if there's some at 9, I wait to start recording at 9 in the ETFs. Notice these sequences. They're always that way. On the bottom of the chart, there'll be a scroll bar. You just grab your cursor, pull it, and it's going to light up in big letters and say metal markets, currencies. I'm in the interest rates. I'm in the group of what Ira calls the spiders. It's where there's a conglomeration. But I've broken these down because these markets specifically are looking at what the futures are doing. If you don't think that the GLD is based on gold futures, you better understand what you're trading, because that's what it's based on. Well, when you're looking at the stock indices, it's all on the S&P futures, the NASDAQ, and so on. And I cover all them, and I go into great detail on the charts where I think you should buy, sell, whatever. I'm not asking you for me to manage your money in any ways. I'm giving you chart analysis. Tell me where you're going to get it. Is your broker going to take time with you? Oh, let's open a chart together in Zoom and do something. I don't think that's going to be the case. So the way that we did it is by creating what I'm doing this way, you're able to sit there to look and see what's going on in a timely manner, and that's what it's about. Each one of the subscriptions has 6 videos a week, 5 daily, 1 on the weekend, just weekly charts. It's not expensive. $16.90, and you don't have to take the combo. You can go in for just if you'd want the spider or just the futures part. Go to our website, under the word research, it's all there. And if you want to learn more about enhanced Bollinger Bands, go under our education section. I'm Ira Epstein. You have a great holiday. I'll see everybody come Tuesday.